Uneducated Economist here. So a lot of people want to ask the question, when is the Federal Reserve going to cut? How much are they going to cut, or are they going to raise rates? And this is a very interesting question when you start to hear some of the response coming from a lot of the people who listen to like the mainstream media, especially a lot of what is being said right now about the tariffs and possible counter tariffs and everything that would come from the future policies that the administration is, going to deliver, however you want to say it. When I think about what it is that the Federal Reserve is going to do, I don't think about what it is that the president is talking about, because the president has even said himself that he doesn't have the power over monetary policy and that he should have power over it, but he doesn't. And so to think about the policies that came from the Biden administration being the reason that the Federal Reserve had conducted themselves the way they were would be saying that they have, like, the president has some sort of power over it. But even Trump himself is saying that they don't have power over it. So to understand the Federal Reserve is to understand it in a way that is to separate it from the political view. And now I look back to 2018 to think about what it was that was taking place within the Federal Reserve that had them so concerned about the future. And now the main problem that they were facing was a low neutral interest rate. That is very important to understand, because many times we have heard Jerome Powell talk about wanting to achieve neutral, but nobody talks about, nobody understands what this neutral rate is. There is no place you can go to say, hey, neutral is here. It doesn't work like that. So to understand neutral is to look at it over time. So I think about some of the things that were being said back in 2018, and it's really important to understand this, to understand why it is that they are conducting themselves the way they are today. The Federal Reserve was in a position in which the neutral interest rate was really low. It was close to zero, and this is what they had to say. Three main global trends appear to account for the bulk of the decline in the neutral rate over the past quarter century. So this has taken it 25 years. It's been ticking on down, right? So the neutral rate over the past past quarter century. One is demographics. Populations are aging as people live longer and birth rates have fallen. Now, this is a major concern, considering that a lot of people are still discussing how it is that the birth rates are falling, and ever increasing amounts of retired people, baby boomers, now coming into retirement age. The second is productivity growth, which has slowed around the world. The third is the heightened demand for safe and liquid assets, which has led to a wider wedge between yields on safe government securities or central bank reserves and the yields on riskier assets such as corporate bonds. Now, that right there, that final statement of the third reason for the decline in the neutral interest rate, this being a big concern, the wedge between safe and liquid assets like U.S. Treasury and corporate debt. And so now I think about some of the things that have occurred just recently with the Federal Reserve and the cutting of rates. See, they've cut interest rates by a percentage point, but what did we see happen within the real economy? Right after that, interest rates started moving up. It even says there that the words that are coming from the Federal Reserve have more impact than their actions, because the actions did the exact opposite of what their words were promising to deliver. See, as they were speaking this up and bringing the idea of an interest rate cut coming to the future, interest rates were actually falling. The moment that they actually cut rates, they moved in the opposite direction. So the decline in the the wider wedge between the yields on safe and liquid assets, like bringing interest rates down. The Federal Reserve really has the ability to buy just one particular asset that is going to be accepted, and that is U.S. Treasuries. When they buy into U.S. Treasuries, that brings the prices up and the yields down. That is how it is that they conduct themselves within the economy. They provide a cheaper rate of lending and a liquidity balance. How much money is out there in the system? So I think about what it is that's happening right now and where it is with the neutral interest rate, because that neutral interest rate is rising based on the inflation expectation. But is that really where it needs to be, or should be, or could be, or would be if it wasn't having that inflation expectation behind it? Is these things changed? The demographics issue seems to still be an issue. Global growth doesn't seem to be snapping back in some dramatic fashion. And the wedge between safe and liquid assets and U.S. Treasuries, I can't imagine getting any better if the Federal Reserve was to start lowering rates in a way that would actually lower the U.S. Treasury yields, the yields on the U.S. Treasuries. So I think about this as far as what it is that the Federal Reserve is going to do. See, everybody's looking at something different. They look at I don't know what the hell they're looking at, but that's not what the Federal Reserve is looking at, whatever it is everybody else is. They're looking at this neutral interest rate and how it is that they can have an achievement of the Fed funds rate neutral, whether neutral finds them or if they find neutral. So the only reason why they would cut is if the inflation expectation was to fall and the neutral interest rate was obviously declining again. Other than that, they are not going to conduct themselves in any way, shape, or form that is going to be conducive to some sort of policy administration demand. It's not going to work like that. This is their issue that they were facing before Biden. Okay? This was happening during the first Trump administration. And it wasn't his administration that was causing this. This was a problem that they were facing going back all the way to the great financial crisis and even prior to that. They knew that the lower bound was going to interrupt their ability to conduct monetary policy. And with the federal funds rate at the lower bound of zero and the neutral interest rate close to zero, it was over. Understanding it in this fashion is going to give you a much better ability to understand what it is that you need to do in relation to the things that are being discussed out there, considering that most people do not see this. You see it now. You know that the Federal Reserve is trying to put themselves in a neutral position, whether neutral finds them from an elevated inflation expectation. Can they maintain that elevated inflation expectation? And the moment that the elevated inflation expectation was to fall, would the neutral interest rate decline again and them being forced to lower? You see? They're trying to maintain neutral. They're not trying to be restrictive. But if they move too fast and they've passed neutral, they will become accommodating. And that is exactly the inflationary expectation. That is something that they are attempting to avoid, as they do not want to be accommodating. They want to be neutral. All right. All right. Moving on. I'm going to keep this very short because I got to go to town and do some shopping and help a lady. This is going to be kind of fun. I'm going to try and, I have the metal detectors. I'm going to help a lady try and find a ring that she dropped near her mailbox. All right, there are poor people and there are rich people. The middle class is a memory. It's starting to be that way. So now what? Take the information and run with it. Do what it is that you need to do. I mean, are you trying to figure out how it is that you're going to buy a house in the future, knowing that the Federal Reserve has no way of actually lowering the mortgage rates? And when they do lower the Fed funds rates, mortgage rates go up. So are you going to continue to follow the Federal Reserve on what it is that you're going to do to try and buy a house or understand that mortgage? Or are you going to start looking at it differently and to understand that the information that they are delivering is either positive or negative, and that will start to influence how it is that the real economy is going to be dealing with the interest rates? I know this is confusing, guys. I know it is. Right? I mean, it's taken me years to develop this idea, theory, and break it all down through these speeches. I knew something wasn't right after the great financial crisis. That quantitative easing, 1, 2, 3, and 4, took the Fed's balance sheet from $850 billion to over $4.5 trillion. The hyperinflation scenario should have destroyed the economy. Why didn't it? In fact, it barely even produced any inflation at all. It was a thorn in the Fed's side that they had done all this money printing and it didn't work. Why? Why didn't it work? It's because most of that money was tied up in the banking system, and unless it's loaned into the economy, it's not going to get out there chasing goods and services. This last time around with all the money printing, there was stimulus packages handed out, but it was a flash in the pan, and once it's spent, it's gone. You cannot maintain that sort of demand within the economy if you don't have ever increasing amounts of stimulus that is going to be backing it up. Right? The supply chain breakdown was very severe. Think about it. They were willing to hire the National Guard to go and move all the containers away from the ports because they were all blocked up. This was like supply chain breakdown at its extreme. And when you have supply demand imbalances, you're going to have inflationary pressure. So now here we are sitting at a spot that is moderately above 2%. This is exactly where the Federal Reserve was trying to put themselves. We've discussed this many times on this channel. And so I think about what it is that's going into the future and what it is that you need to do, right? Think about how the information is being delivered to the economy, because that's the positive or negative that is going to influence the rest of it. Their words have more power than anybody realizes, and they know this, right? They discussed this here. Let me see if I can find it here real quick. Says right here, expectations become a focal point in academic and policy circles with the emergence of the new Keynesian models in the 1990s as a framework for monetary policy. In these models, aligning the expectations of decision makers in the private sector with those of policymakers produce superior economic outcomes. Aligning the expectations, literally communicating out there. Mike Woodford, one of the developers of the Keynesian model, put it this way: not only do expectations about policy matter, but very little else matters. So again, what do you do with the information? Think about how it is that they are delivering it. Why are they delivering it the way they are? The promises of a future rate cut were far more powerful of delivering lower interest rates into the economy than the actual delivery of a Fed funds rate cut. Why are we focused in on the interest rate cuts if they're not going to do what you expect them to do? But you know what you can expect to do is listen to the Federal Reserve, how it is that this information is being delivered and what that is doing to the economy itself. Think about the inflation pressure that is being put into the economy right now just from the credible threats that are coming from the president right now. It's insane. It's an amazing amount, and it has a profound impact on the economy. So when the Federal Reserve is going to cut rates because the president said so, I doubt that. I very seriously doubt that, considering that they got this 22-year-long plan that spanned right over the top of his administration, his previous ones, even though he was willing to fire Jerome Powell back then. They didn't care back then, and they don't care now. What they do care about is getting to neutral, however that happens. Moving on. All right, we got All Nighter says, thanks, Wayne. Thank you, All Nighter, for being here. Brody, you too, man. Yo, please don't post in all caps. Also, don't think BTC is the answer. yeah. I don't really read comments that are in all caps, and BTC really isn't the answer, although I'm big fan of Bitcoin, right? Some people feel the rain, others just get wet. Is that Bob Marley? Is that who said that? I'll be there with my 16-year-old son, or I would roll the dice a few times. I do have self-control to walk the F away, win or lose. Talking about gambling? I'm not sure I've ever seen you fail to call the dice. What, did All Nighter not call it? Oh, there it is. Calling 5 on the dice. Eh? All right. Cruising down to the bottom. I retired in 2014. Bitcoin, you keep working. You learn. Yeah, Bob Marley or Bob Murphy. Yeah, I am very impressed with the Bitcoin position that I have taken, even though I wasn't expecting anything to come from it. It has just by far been the best, spot out of everything that I have. I even bought into Coinbase, dollar cost average, $50, every couple of weeks, whatever. And it did phenomenally well. It grew to the best part of my stock portfolio as well. And again, not anticipating that at all. I wanted it to be in something else, I picked other stocks Altria. I picked total stock market ETF, Vanguard ETF, total stock market, Russell 1000. I put money into all these things, and they've like practically were standing still comparatively to Coinbase and Bitcoin. So I mean, it's not a matter of what you want, right? It's like that. That part doesn't matter, It's just like because the results of the outcome is probably going to be much different from what you want, But to me, like I look at that and I think, dang man, I wish I had purchased more. But then again, you always wish you had done, hindsight's always that 2020, right? All right. All Nighter says, Justin, I don't think so, as the Fed is a private membership association, private being the key word. Yeah, who is that? Let's go read Justin's comment. Justin, can a president actually fire a Federal Reserve employee? No, they can't. Well, I mean, there's certain, like, the president doesn't have a choice over it. There's already rules set in place on how that firing would go down, and typically it would be from like misconduct within the Federal Reserve, like not acting appropriately. So basically, just getting fired for not doing your job right. And it's not doing the job right, meaning that they don't align with opinions. That's actually protected. So just because you're not, doing something of an opinion decision, that's not something they can get fired for. And it's funny because they put these what was it? We did a discussion on this for the members only channel too. So Justin, actually, if you really want to know how this goes down, we did a members only, I don't know, maybe about 2 or 3 months ago, talking about this exact thing. We broke this down over a couple hours discussion. And so if you want to really know, just, $1 a month, right? Become a member. You can only just do it for the 1 month and go watch all the videos, and that's all you need to do. But you can become a member of the channel. There's access to the member only videos, and there's a video in there that breaks this down in detail exactly, with links down in the description of that video, breaking down exactly how this works. And since I don't have those notes in front of me exactly, I don't know where they are. They're here somewhere in the computer, but basically what it goes down like is that once a Fed president or governor, I think the president is Fed president of the different Fed banks around the country, once they are in that position, it spans like multiple administrations. So like you can have an administration for 8 years. They go for like, I think it's beyond that. Like they can actually be within office over the course of like not just one president, but I believe like even two. Now, whether or not they'd run those consecutively or, break it up over time or something like that, there are some rules changes to like how they can actually be in the office, out of it, back into it again, stuff like that. So there's a lot of discussions on like if the president was to put somebody into office, because basically they have to be appointed. They get up the chain of command basically to a certain point, and then they're appointed by the president of the United States itself through the voting process of the governors of the Federal Reserve Bank itself. So they're self-elected to a certain degree, and then then the president will appoint a particular chairman to the Federal Reserve itself. But again, this is usually worked up through the chain of commands. These people have worked through the banking system already, and so it's not like just somebody who's just like, hey man, I think you over there, just some random dude. It doesn't work like that. Like they go through this, through this process. I forgot what the original question was. Oh, so can he actually fire anybody? No. Once they're there, he can't fire them. That's it. And that's the whole point of this particular process and the way they do it, so that they can't get fired just because a particular president has come in and he doesn't like the opinion of the Fed. They're like, well, that's too bad. We're an independent organization. Anyway, right? Okay, so who will be the next Fed chairperson? And who cares? Does it really matter? Like, that's a good, I mean, I don't mean to like, knock your question, Bryce, because I mean, that's a good question to ask. But I mean, ultimately, does it really matter? Because the chairman of the Federal Reserve is a spokesperson. He's not the one who's in charge. Jerome Powell didn't make any decisions on his own other than the one that he voted for, which is one of 11 or 12 votes. So there's 11 other members of the FOMC who voted on monetary policy. once that monetary policy was voted on, he came out on camera and delivered the message to everybody, and then everybody wants to give him the finger for it, right? And so it's like that killing of the messenger does not do anything to change anything about how anything is going down other than the message being delivered, right? The way that it's being received by you, it'd be by somebody else, right? And so it's no point in killing the messenger. That part is not even, there's no point in even focusing in on it. What you need to focus in on are the speeches that the people of the FOMC are delivering out there, and especially the ones talking about monetary policy, because that's the one that impacts you the most. So again, member-only videos, I have linked down in the description. Go and watch all those, speeches that we have broken down. You will too understand what it is that's going on with the monetary policy that seems to be completely different from the mainstream media propagandized information, and definitely different from the delusional thoughts of like presidential opinion differences. I don't know. Like, there's never been a discussion coming from the president's mouth talking about the neutral interest rate, right? I mean, this is what the Federal Reserve is focused in on for their monetary policy. And Donald Trump will talk about everything else in the world and talk about how the Federal Reserve was benefiting Biden and doing all this other stuff, and like, know that they're acting. And I'm thinking, well, can you please mention something about the neutral interest rate? And that, because like everything that they discuss within their own documents, literally hundreds of them in their speeches that nobody seems to talk about at all, but the Fed themselves, they talk about the neutral interest rate being the issue. Just saying. Start growing your own food, balls, and sea salted clean water. Huh. All these tariffs going through. Yeah, but again, we have to kind of see, like, okay, so I was thinking about this again. Let's take lumber, for example, for the tariff, because this is the one thing that I talk about and I know about is the tariffs on lumber and what that could do. So let's see if we can break this down and just kind of simply think about this for a minute. If we assume that there's going to be a 25% tariff on Canadian lumber coming into the United States, what kind of impact would that really have? Like, let's think about it on an extreme level. Let's say, for example, we take $100. $20 of that is the Canadian portion, right? Because Canada has 20% of the softwoods that we consume here in the United States comes out of Canada. So immediately out of this $100, right, $20 of it is the Canadian portion of it. Now, of that $20, there's going to be 25% tariff attached to that, right? So now this is going to go up by $5. Right? So now we have $25 incorporated into our $100. So that's an increase of 5% on this, from this tariff, from this 25% tariff on lumber. You see what happened here? We experienced a 5% increase in lumber yesterday, on Friday. So all the impacts of the tariffs on Canadian lumber happened yesterday. It's over. Did anybody feel it? Did anybody notice? I mean, I talked about it on my channel, but nobody like took it into that consideration that the entire tariff pricing in occurred in just a few hours yesterday, and it's all done. Huh? Yeah, even if you doubled, just think about it on a much more extreme level. You took that same $100, the 20% of it being the Canadian portion of it, and you doubled it. Right? 100% tariff. Right? Put it back in there, and now you're up to what? 120, a 20% increase on lumber prices. Well, that really would put us at what I believe is probably going to be somewhat of a profitable position for the mills, considering at $500 per thousand, they curtail development and can't produce. So here we are at $600 per thousand. If you were to increase it 20% from here, it would be an extreme amount, but it wouldn't be the all-time high of $1,700 per thousand. You see, these tariffs on lumber is not going to be that impactful. Will on Western Red Cedar. It will on Western Red Cedar because that's more of a Canadian import than the 20% of framing lumber. All right, tariffs. Tariffs will lower our standard of living, then be by force, not voluntarily based on Cantillon. They should do the trick, right? No, because the problem is that we won't lower our standard of living. What we'll do is we will create the inequality. There will be some people who will lower their standard of living, and that will create the gap to make it even bigger. No, the problem will get far worse. Okay? We're not gonna bring manufacturing back until the entire system collapses and then we restart. That's like, there's no reversing. It's a direction that it's moving into, and it's separating the rich from the poor. No matter what you do, it's going to get worse. Like, no matter what you do, the only way you cannot do it is to literally turn off the new money. And that is the exact opposite of lowering interest rates. Lowering interest rates turns on the new money, which makes the problem worse. And if you don't turn on the new money, the pain gets worse. Which one do you want? The problem getting worse or the pain to get worse? Because it's one of the two. Right? It's inequality, growth, or painful and misery. Pain and misery, that's it. That's the only two directions this can go. And so I'm down for either one. I don't care. Like, I care a lot, but I don't care which one it ends up going into, because I've thought about it. What would that be? What would I have to do? Like, it's not a comfortable feeling to think about what it would be like to do that, but I have, and that's not the life that we live. We live a much different life, and that's the one I actually pursue. All right? But I have thought about what it would be like if we did need to go into some sort of systemic crisis and what that would actually be like. And that's not something easily understood, because at that point, nobody knows exactly what that fiat currency collapse would be like when we have a world currency that's based on a single country's sovereign debt. It's very precarious, to say the least. All right, Deja Vu, thank you so much. Look at that, been a member for 13 months. Thank you so much, Deja Vu. And I'm sure that if you were to ask Deja Vu what that 13 months has been like as far as the information being delivered through those member-only videos, I'm sure it would be worth the $13 that you paid, right? All right. Deja with the hands, I love it. All right. You are a very smart guy. Just get out of time before you are out of time. Huh. Okay. Question: why is no one talking about the tariffs on America that have been there for 80-ish years, and America not countering tariffs those countries? I don't know, Niels. I mean, I'm pretty sure that I do talk about it. Like, I don't talk about other other industries that have tariffs, because I don't know about those other industries. Like, I kind of know about them, just the same thing that everybody else reads out there, but I do understand, and I talk about the tariffs on lumber. And so when, like, there has been, like, I've talked about this before, like back in 2018, we were talking about this. I was discussing it as part of my lumber, discussion. Goes all the way back to the 80s. This trade war with Canada over lumber has been ongoing for a very long time. So it's not new. That's why I keep trying to say it. I mean, I've been saying it. I've been saying stuff about the monetary policy nobody talks about. Like, and what got me is, like, this is what's really funny about this, is that I'm discussing this with somebody and they're like, yeah, they're just lying. And I'm like, I'm showing them the credible threat theory and showing them these speeches and stuff. And they tell me, oh, they're just lying. And I'm like, to who? To who is it that they're lying about this particular information? Because I cannot find a single other person who's talking about it. So they're lying to me, the uneducated economist. Like, they developed all these speeches, went and had all these discussions, had these, conferences, all these working papers, and every single bit of it was to fool the uneducated economist. Because I can't find anybody else talking about it. I'm the only one talking about it, and they're saying, well, they're lying. And I'm like, to who? They're not lying to anybody if they're just talking to me, right? They're not talking to me. They're talking to the other central bankers. And I'm reading that stuff. And it took me a long time to be able to interpret what it is that they were saying because they talk in code. I mean, this is something that I don't know if a lot of people realize. They do that on purpose. They discuss and use words that are in a way that people don't really understand the meaning behind it. And they do that on purpose. It's called Fed speak. All right? And this Fed speak is very difficult to interpret. Over time, it becomes clear. It's like learning another language out there. But for the most part, people go through these speeches and they read them and they're just like, man, it's just this gobbledygook of words. It doesn't mean anything. Once you start breaking these things down and you start understanding the meaning behind it, they can't hide anymore. Their communications are very clear. Right? But since people get stuck on things like 2% target as their goal, as opposed to a 2% average inflation rate over time, it leads me to believe that they do not know or discuss or can interpret the things that are being said there at the Federal Reserve. Now, I'm not trying to like say I'm some sort of super genius that I figured it out, but I used to take these speeches and I would literally read them over and over and over again until I had internalized everything that was being said within these speeches. And it wasn't easy. Sometimes it took me a long time to understand what it was being discussed. And the more I did this, the more I realized, okay, now I understand what they're talking about. And it, I've even had people who come to me and say, man, I love your stuff, but I don't understand anything you're talking about. And that was something that I didn't want for the channel. Like I wanted to be the person who says, no, I can take this information and interpret it and then deliver the information out there in a way that you would understand. And people come to me and they say, dude, the words that you use and stuff like that, I just don't get it. And I'm like, oh man, I speak like these guys now because I've been reading their language so much. Right? Hey, Justin, right on, man. Thank you for being the member of the channel. Look at all these members. You can tell from the little star there next to their name. All right. All nighter hider with this one. I see her. Other people disappear. All right. More money is made in bad times. If anyone filming out at sea, I would love to see it. Deja vu. Great question. Now, here's the thing. There's copyrights that are involved with these plays and stuff, and I'm not exactly sure the legal technicalities of it. It is getting recorded, and I will be in possession of a DVD at some point. Now, again, like I got to figure out exactly what it is that can be done at that point, but we'll see what happens. But yeah, the play is going so good, guys. We did a show last night. It went over really well. It's been so much fun. It's kind of weird because, like, in the very beginning, this is what's neat about doing something new. And like, how much time do I have? 33. Okay, I'm going to have to call it quits here in just a minute, but I'll talk about the play for just a second. You step out into the unknown. Like I did rehearsals for a previous play, and then we did one show, and then COVID shut the theater down, and it never got back. Right? They ended up doing the show, but I wasn't available to do it. Okay, excuse me, guys. So anyway, this has been like a really good experience for me. It's something that like you have to really dedicate yourself to. You got a whole team of people. This is like it's not just me in this one act. It's the entire show for the entire night and the other three acts. Like this is even though it's three separate plays, it's one big show, right? And so when you do this, it's like a commitment that you cannot back away from. And when you're in the middle of it, it is a lot. Like the rehearsals are a lot, the time commitment is a lot, the studying of the lines and memorizing, it's a lot. Everything is very intense. And so when I took on this, I thought to myself, man, I already don't have the time. This is going to take every bit of time that I have. And I'm good with that. I'm going to push it to the limit, right? Because I want to see how much I can actually do. And knowing that there is nothing to gain from this other than the joy of doing it. I don't get paid. This is completely voluntary. This is something that is very important to a lot of people out there. that I have committed myself to. And by doing this, I feel the energy shift change within me. It feels good to have done this. And being in the middle of it right now, it's really weird because like it was high energy, like experience new things to all of a sudden it's starting to feel familiar. It's starting to feel like this is normal to me. Like I should be on stage doing these plays, acting, entertaining in this fashion. Like this feels normal, right? And I love that feeling. Now, whether or not I continue on with it, now that'll be another thing to be said because, like I said, it has taken up all my time. But it proved something to me that yes, I do have the time to take on something of such magnitude to do this, right? Because a lot of people might not see it that way, but to me, it was huge. It was a huge thing to do. And not only did it like fill in all the rest of the time that I had it and I figured it out. And knowing that means that I can take on other things as well. Knowing that I did not have a limit to how much I was doing at that moment, there was more I could do. And I proved it to myself with this play. And every night when we do a show and at the end of it, and I'm listening to those cheers and people being entertained, knowing that the group of us had taken those people away from their life for just a moment so that they could sit there and enjoy a show that had been so well delivered and entertaining, to get that experience like that applause from that, it's the best. It is so good, right? I mean, it's like better than can't even describe it. It is so awesome, right? So I think about that when people are like, man, what do I do in my life? What am I supposed to do? Right? I was just like, man, there's things out there that you could be doing. Don't think about the money, right? The money will come. If you're in the vibration of money, money will flow. Money will flow back towards you. But a lot of times you just have to figure out what it is that you need to do that's driving you to be enjoying what it is that you're doing, knowing that it's committed, knowing that it's hard work, right? And seeing that at the end, that result, that delivery of that energy out there to the people who received it and their like enjoyment of it. So rewarding. So rewarding. All right. Uneducated economist. You guys